Hey guys, welcome back to the part 2 of how to understand the market directions. And if you haven't watched the previous video, I highly suggest you to watch that and then come back to this one, because in this one, I'll be showing you how to understand logically the break of structure and the change of momentum. And that is going to be a very in-depth explanation with few examples. So yeah, make sure that you refer back to the other video, because I made a drawing where I was explaining the direction and the market bias, and then I wrote here wicker body. And I know a few people ask me, what did you mean by wicker body? So in this video, I'm going to explain you exactly what I meant when I said about the wick and body, and this goes to the market structure. Okay, so how do you identify and how do you validate a break of structure in order for you to say, oh, the price has changed or shifted the momentum? Now this is nothing complex. It's actually pretty simple, but the way I see it is that, and that's why I say it has to be used with logic, because a lot of people will always tell you, oh, go with the body, go with the wick and whatsoever, but they will never tell you the logic for it. Okay, so the way I see it is, if I see even a wick, right? Even if a wick, like for example, let me see this one, right? For example, you can see this. Okay, that's a prime example, like the best example I can give it to you. Okay, look at this. If I see price violating like this high, you see this high, all right? Even with the wicks, you can see the body is not close, okay? What comes through my mind is the momentum. And I already made a video about it on my channel, so you guys better watch that, because that will help you to understand what I'm talking about over here. But basically, when I see this, is telling me that from wherever the price is coming from, so in this case, right, over here is a demand, is telling me that there is a strong power from the buyer side to keep going to the high. So what do I mean is that, is this a break of structure or not? This is simply intentions, okay? Price is telling you the intentions. The buyers are telling you the intentions that they have a very solid power to break through the supply, so break through the sellers to keep going to the higher side. So that's how I see that, okay? And for me, to validate a break of structure, I always use wick, okay? Because wicks is equal to intention. Wick is equal to strength. The price is telling you that the price is coming from a very strong demand and there is power to break through it and keep going higher. Now, obviously, that doesn't mean that every time you see a wick or every time you see a body or whatever is always a break of structure, because it can be easily a fake out and keep going to the downside. We will never know. However, based on my data collection over 1 year time and over all these exercises and practice I've been doing, I did realize that actually, this is the most logic way for you to understand how to identify a valid break of structure, whether using a wick or break of structure. Of course, many will disagree with it, because they will be like, oh, put the body because, it full volume, blah, 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 whatever. Well, beautiful. I respect that. I have nothing against those people. But for me, based on the understanding I have, the way I backtested it, and if you just think about it, right? I mean, it makes sense, right? Why it makes sense? Because if you see price, for example, okay, let me show you, for example, this one here, right? So now if you see price came all the way to the supply, right? So what do you think is happening? When you have a reaction to the supply, what is the first thing you see? A quick runaway, okay, from that specific zone. So you can see there's a huge drop, and the drop is so strong, the price even fails to make a solid retracement. It just keeps going down and down. Look at this. Look at the momentum. Reaction, retracement, reaction, retracement. But look at the level of retracement. Guys, I made a video about this as well, the level of retracement. Please watch those videos and try to put everything together, because you're gonna have crazy, mind-blowing breakthrough over here, right? So look at this. When price traps my supply, look at the quick reaction away, okay, away from it, and then it even fails to make a solid retracement. It doesn't have it. All this drop to the downside is coming from where? From this specific supply. So now, if from this specific supply price is running away, okay, why then price shouldn't be doing the opposite from the demand side? Like, why price shouldn't be tapping there and showing the intention, pushing price to the upside? Do you guys understand what I'm saying? So when it taps here, the reaction is so strong that even if it comes with the body or wick, it still breaks this high. So for me, that's a strong intention from the buyers to keep going to the upside. And that's the logic I want you guys to understand. That's why I identify break of structure with the wick and not the body. Then obviously, as I said, everything is all about statistic, right? Everything. So you cannot say, oh, if you close with the body, then it's a break of structure 100%. No, even if you close the body so many times, you will see that it still doesn't hold. So for me, honestly, wick or body doesn't mean anything, but the one thing it means is the intention. If I see the wick going through that, it means I'm taking it. That's it. So guys, I really hope you get some deep value and understanding from this video. I'm not keeping you longer because we already spoke a lot. There are a lot to talk about this order flow and structure, but you can clearly see why I'm saying that putting the structure is very important compared to liquidity. Because with structure, you don't guess. With structure, you build the narrative, you do multi-time frame analysis, almost the way I told to you, right? The range, the retracement, the expansion, and everything. You do the same exact things, smaller time frame. You got range, retracement, expansion, and then you take your trade. And that's the thing that we can use as a retail trader, right? Because that's the only information available to us, which is the price, the candlestick, and the time frame. I mean, we are not Bloomberg or anything else that we can see what is actually going on within the price or even the order flow. So this being said, guys, I hope you really enjoyed and loved this breakdown and the understanding of the order flow. If yes, please subscribe, share the video, and I'll catch you next time.